my dad would always say this one thing to us whenever we didn't want to like study on the weekends or something. He would always be, do you want to work hard now for 5 years and kind of take it chill the rest of your life, or do you want to have your fun and chill now for 5 years and then work hard for the rest of your life? And I think that was one of the many factors that got me into this mindset of thinking long term.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Keshav Kolur. Keshav is a full-time real estate investor and the principal and founder of Clive Capital. It's a private equity firm based out of New York City. And your bio is very, very impressive, but Keshav, I want to just say thank you for coming on the show today and let you tell your story, let you kind of go through it yourself in your own words. I think that's far more interesting to the listeners. But again, thank you for taking the time out today.
Yeah, I appreciate you having me on, Jason. It's an honor. So, and thanks for those listening at home.
Yeah. So why don't we start with just, tell us your story, tell us your background, kind of what brought you into the real estate space. Give us a little bit of a rundown.
Yeah, and I love your podcast name, by the way, Know Your Why. So I guess we'll start with that. Yeah. I think it's really important when you start on this journey because it's definitely not an easy one and it takes years. So I graduated college in 2019 and read Rich Dad, Poor Dad, just I think on my vacation afterwards. Went to Southeast Asia for a month and I thought, what better way to kill 18 hours of flight time than to read Rich Dad, Poor Dad. And Rich Dad Poor Dad inspired me to look into real estate as an alternative way to build wealth outside of your typical W-2 or business that you own for yourself, which I think for most business owners becomes a W-2 as well. Like there's no freedom in it really for most. And so I realized coming back after that trip that, I had fun traveling, being with my friends and, then work started. And I mean, work was great for the first few months, but then, that honeymoon phase ended. I went on another vacation with my friends, maybe like towards the end of that year. And coming back after that was pretty tough. So I was thinking to myself, I want more time to spend with my friends, with my family. I had seen my parents commute an hour one way to work every day and work the standard 8 hours. By the time they were back, it'd be like 7, 8 p.m. and it's rinse and repeat. And I just could not bring myself to do that for the next 40 years of my life. I wanted to have options at least. If I wanted to do that, I wanted to do that, but I wanted to have the option to walk away too. So that inspired me to take action on what I'd read in Rich Dad Poor Dad, got my realtor's license in March of 2020. Not March, actually, leap day of 2020, February 29th. Then COVID happened. 2 weeks later, the market shut down. But once the markets reopened, I sold a few homes, started looking at buying single-family homes and renting them out. But before I went too far down that rabbit hole, luckily, my roommate here saved me. His dad had been investing in real estate syndications, buying apartment buildings specifically, multifamily value add strategy. And I thought to myself, hey, buying apartment buildings sounds so much cooler than just buying one home at a time. So I reached out to the author of that Reddit post just to learn more and really spent the next year from September of 2020 to September of 2021 familiarizing myself with how these syndications, these passive investments worked. Because no one I knew was doing them. My parents weren't doing them. My friends weren't doing them. And I thought it was too good to be true to generate higher returns than the stock market and get tax benefits and be hands-off in an investment. But spent the next year doing my due diligence. I liked what I read from books, learned from YouTube tutorials, from networking, made my first investment into 108 apartments in San Antonio. I started seeing the cash flow and the tax benefits come in, and I figured if I'm going to do this for myself, I might as well do it for my family and friends too. right? What's the point of being financially free all alone? I'm just going to sit at the beach without anyone. So started my company, Clive Capital, January of 2022. And our mission is to help everyday investors, primarily tech employees, though, at big companies like Amazon, Facebook, because that's my background as a software engineer in those companies also. Help those folk primarily, but anyone else who's interested, build generational wealth for themselves through these alternative investments with one, superior risk adjusted returns, two, cash flow, that passive income that people are always running after, and then three, tax benefits, because taxes are one of our biggest obstacles to building wealth. So, with that in mind, we've helped people invest into the renovation of over 1,000 apartments so far and the ground up construction of 500 single family homes. And we're always looking at new opportunities to help our investors build a diversified portfolio outside the stock market to achieve those three objectives I just mentioned. And that's the goal, is for our investors to have different assets all over the country, maybe one day even over the world, just paying them monthly, quarterly for putting their hard-earned money to work.
Yeah, sure. And one of the things you said kind of right in the beginning that struck me, and it's because it really resonates, is you said that you want, whatever that, you said your parents worked, the 40 hours a week, commuted, and you wanted it to be a choice for you, right? You didn't want to have to do that. And I think that is one of the biggest things that maybe at a very, very basic level, that's what financial freedom and all of that, that people talk about and put a lot of terminology behind, and we, alternative investments, and we're going to do value add and all, and like all that stuff's great. We need to know it. But like at the end of the day, what's the real goal? The real goal is optionality and being able to, sort of work on what you want, when you want, with who you want, kind of all that stuff. So it's never with the, as you said, you don't want to just go sit on a beach by yourself. Like this is something that's meant to be shared with folks that are close to you. So when you started Clive Capital, were you still working a W-2 job? I know you said you got your real estate license. Like, how did it all tie in together in terms of the way you spent your time?
Yeah, I was still working my job. I still am, actually. So I'm at Meta as a software engineer. I put in a good 30, 40 hours outside of that, into the business too. So it's like having two full-time jobs, but that's just kind of what it takes the first few years. And a lot of it comes down to, time management, obviously. You can't just be dilly-dallying on TikTok or, watching every sports game of your favorite sports team. There's sacrifices that come along the way. And it's about having a team in place, I would say. I'm not a one-man show. I have, virtual assistants who help me with a lot of stuff. Just like the podcast that you're running here, we have our own podcast, Investing for Generational Wealth. Would love to have you on there if you haven't signed up already as a guest. But, my virtual assistants help with that. They help with keeping the inbox clean, marketing. I have a business partner who helps me screen investment opportunities, and he has a marketing background. The single family home development company I'm a partner at, Legacy Acquisitions, we have a team there as well. So I think it really comes down to a lot of those things. It's, time management, I would say, having the people, the systems, the processes in place, and then just having the discipline and consistency to show up day in and day out, because what we do as any business isn't easy. There's risk involved always. It's not a steady paycheck. You have to go out there and kill what you want to eat. So I think it's just doing what needs to be done every day, regardless of how you feel or what happened that day. You lost a deal, pat yourself on the shoulder, get back up, do it all over again.
Yeah. Yeah. It's getting used to that, getting comfortable being uncomfortable, I guess, if you will. But I think, you mentioned the team. It's such a great, it's sometimes a hard concept to realize, but the idea of Who Not How is one of my favorite books. I don't know if you've read it, but it is such a powerful concept, and it's like it's kind of funny. It's one of those books where the title tells you exactly what it's about, and you think, oh yeah, well obviously but actually reading it, to me it almost gave me like the permission to recognize that like allowing other people to do things is okay, not trying to do everything yourself, because it is a time issue, in the sense, you mentioned you have a full-time job, you're doing real estate, which is essentially a second full-time job. I completely understand that life. When you first get into being an entrepreneur and a business owner and a real estate investor, you don't work less, you work more in the beginning, so that in the long term you can work less. And it's but kind of establishing all of that you said, your team, the systems, everything that kind of goes along with it. And in the meantime, you're making some sacrifices. And so I'm going to put this question on you, because people have asked me, but like, how do you manage that time? It's something, it's like, to me, it's in a way, it's like once you just you decide you want to do that thing, that just becomes the priority, and you spend time doing that thing. But I wonder if you have any tips for people listening that are, thinking, okay, this is interesting. I want to get, I want to grow something outside of my W-2 job, but I don't want to leave the, safety and comfort of that job with the steady paycheck. How do you manage things, kind of on your day-to-day basis?
Yeah, I would definitely say that for anyone who's looking to do this, definitely don't quit your job until you've replaced at least some portion of that income. A book that I read recently, Cal Newport's Deep Rules for Deep Work, or something like that, in a Distracted World. I forget what the exact title is, but he talks about that. One of the solopreneurs I respect on LinkedIn, Justin Welsh, I think one time shared a stat that people who held a W-2 while they scaled their business were more likely to succeed in scaling that business than people who completely jumped ship, realistically. So I think one is keep that safety net around, just spend your 5 to 9s and your weekends building the business. And I think it comes down to like on an individual to individual basis, what your priorities are. For me, I care about, I'd say, kind of 3 things. My health, first of all. And so I'll still do my best to go work out a few times a week. And I care about my relationships. Like I said, there's no fun in just being on a beach all by yourself. And then third, I would say it's, freedom, success, things like that, abundance. Anything else beyond that, if something doesn't fit into those 3 categories, I don't pay much attention to it. So, sports games, like I'm from Boston, the Celtics just won the NBA finals. I didn't watch any games unless it was like an elimination game, for example. Never watched any of the regular season games, none of the playoffs, until I got to the finals, and it was elimination games. And so there's sacrifices that you have to decide for yourself, like this is worth it for me and this isn't. So I will still go on the weekends, and hang out with a friend or two and spend time with them, because I realize that in 5 to 10 years, we might be living on opposite sides of the country with our own lives, and we might only see each other once a year or once every other year. So for me, like sports, TV, social media, video games, all that stuff, partying doesn't matter as much as the 3 things I mentioned. So I think it comes down to realizing we all have 168 hours in a week. There's no excuses for anyone, really. Like everyone, to some extent, has the same most valuable resource, I would say, which is time. And so it really comes down to cutting the fat as far as, hey, this is what I will spend time on, and this is what I won't spend time on, and building systems around that, whatever that is, setting screen limits, deactivating your Netflix subscription, whatever your distractions are, just figuring out a way to put systems in place and not solely rely on your willpower, because sometimes it's a lot easier to follow rules that you have set for yourself than it is to just think to yourself that you'll do the right thing every time.
Yeah, I agree. Yeah, it's one of those things that you think you're busy, and in reality, you're probably just not prioritizing that time. I didn't know this. I didn't know you're from Boston. I'm also from Boston. It was very exciting that the Celtics won the championship. But yeah, I didn't watch every game either. I watched parts of some, and it was like great. But also, I'm a season ticket holder to the Patriots, and I used to watch like every single football game. Like I love football. I used to watch football all day, Sundays, like Monday night, Thursday night, like anytime there was a game on, I watched, regardless of the team. And I still enjoy it, but it's like you just realize how much when you start to change those priorities and shift towards how you spend your time. And like for me, part of it was the journey into real estate and owning businesses and things like that. It was also having kids, right? Like I don't know what I did with all the time I spent with my kids when I was like now that I have kids, like that's the focus. And so it's just kind of like you can look back and see, hey, maybe it wasn't I wasn't optimized in terms of my time efficiency. You're a young guy. You said you graduated from college in 2019. So you're a young guy, like realizing these things at a young age is I think phenomenal. Like I get really excited when I talk to younger people that are like thinking about investing, whether it's active or passive, like just they're starting to have these ideas in their mind about, what am I going to do to set myself up for the future? Because that like compounding of your investments over time is probably the most powerful weapon that you have. But I would imagine, a lot of young people, that is not their priority. You said you read Rich Dad Poor Dad. That obviously influenced things for you. Did you have any other influences that kind of pushed you down this road rather than, sort of staying the traditional, if you will, in the W-2 job? I mean, being a software engineer is I think a highly valuable and sought after position. So I don't think it's probably hard for you to find work. Like what did you have any other influences that, sort of pushed you in this direction?
I think there are plenty, but I think one, just growing up, my dad would always say this one thing to us whenever we didn't want to like study on the weekends or something. He would always be, do you want to work hard now for 5 years and kind of take it chill the rest of your life? Or do you want to have your fun and chill now for 5 years and then work hard for the rest of your life? And I think that was one of the many factors that got me into this mindset of thinking long term and not being like an instant gratification monkey, which I think our current culture has turned us all into to some extent. With social media, technology, everything's at our fingertips. Amazon, everything gets delivered instantly. It's more and more difficult to have that long-term mindset. So I would say my dad telling me that is one big thing also. So right now, that's my focus. Like I've been out of college for 5 years. I would have hoped that I would be further along in my journey than I am, but your journey never turns out like you think it would. So that's always been my mindset. It's like I'm going to grind now, like you said, when I have no kids, no family, not as much of an obligation as when I get older. You're going to have to play it safer because it's not just you anymore. It's your loved ones who are depending on you too. So just take those risks now, both with my capital and my time, to really swing for the fences and build something big, help others along the way, and do something that I'm proud of.
Yeah. You said, you hoped to be farther along right now than you are, which is a funny thing if you put it in context, right? So one, the years that you got involved in real estate, especially if you really got serious in 2022, you had about 6 months of good market, and then everything turned around and sort of punched us all in the face. So I think that it going slower than we want right now that's just the norm. But also, like I said, like you're young. Most people aren't doing this at all. So you may not be as far as you want to be, but in reality, you're way farther along than someone's just not doing it, right? And that's independent of age, right? Someone who's not doing it at, 25 versus someone who's not doing it at 55. Like you're missing that piece of kind of your future security. So I again, I just get really fired up when I get to talk to younger people that are thinking about these things, because you just have time in your favor. And what your dad said about, sort of work hard for 5 years so that you can, then relax after that. It's so true. Like, because of that power of compounding over time. It's like you can do that early on, and you don't actually, 5 years is probably enough. Or you can play for 5 years and then have to work harder for longer afterwards. So it's really a true statement, and very wise. What you the timing, I just mentioned the timing of kind of when you got into this business. What do you think about sort of the current market, and where we're headed? A lot of people, the thing that people know, the headlines, is usually interest rates, but it's not the only factor at play. I'd be curious just to get your take on how you feel about things, what you think the not too distant future holds.
Yeah, yeah. I wish I had that crystal ball. I think we all do, obviously, but I wish I had more time to read like macroeconomic news. But at the same time, the news that you do read, like it's only the flashiest titles that come up, right? So it's interesting. I mean, with real estate specifically, I think a lot of the opportunity still lies ahead with people who have like floating rate debt, or just a lot of these new syndicators. I think 70% of them I saw on my LinkedIn the other day. Mauricio Raoul, he posted that 70% of syndicators got into the business within like the last 5 years or so. So it's a tough environment, and a lot of people got into this business fairly recently off of all these like coaching programs out there. So I think, the financial environment and just the lack of experience out there, there's going to be a lot of deals to be had. So that's not to say that you should be timing the market. That famous Warren Buffett quote, time in the market is better than timing the market. But I think it's tempering your expectations that, hey, like returns aren't going to be crazy like they were back then in like 2020 and 2021. Interest rates are going to be higher. And this is just the new norm. Like decade low, a decade long of interest rates, that's just not normal activity. So I would say, like, always keep your eye on investment opportunities, regardless of what the macro environment is like. Stay up to date with the macro environment too. There's a lot of indicators out there, depending on who you ask. Like a lot of these retail stores shutting down across the country, and I think like consumer savings are rapidly decreasing too. I read something about how like Domino's Pizza wasn't gonna include any forecasts in their upcoming earnings call. And so, like, what does that say about consumer habits and where retail spending is going? The stock market's at an all-time.
People are cutting down their pizzas.
Yeah, exactly. But like the stock market, interestingly, is at an all-time high. The Warren Buffett indicator, which is the U.S. market cap, stock market cap to U.S. GDP ratios, like 2x. Which the last time that happened, it was the dot-com bubble. But it's a very different economy now. It's a much more tech-based economy with companies like Nvidia, Google, Meta. It's a lot different from what it was then. And then we have the issue of elections coming up. There's national debt that's been on everyone's mind. Like, how is that going to play? All that to say, like, there's a lot of things going on. I am a little cautious now. It's not, I don't think any of us are as carefree as we were in 2020 with respect to the financial and investing environment. But at the end of the day, there are, like, if you have an investment thesis, and mine is to invest in things that people will always need, right? People will always need housing in the right areas at the right price. People will always need energy. So that's why I have oil and gas as an investment in my portfolio. People will always need industrial warehouses, for example. So we like industrial as an asset class. And some of these are like timeless investments, regardless of whether the economy is up or down. People don't need Google. As a software engineer, I'm saying this. People don't need Google or Instagram to live. They need a roof over their head. They need goods being sent to their home that are being shipped out of these warehouses. So that's what I would say. Don't stay educated. Don't be afraid, or be like afraid in a calculated fashion. Um, and then investing. There's always going to be a risk. Sometimes, more times than not. Hopefully, if you're doing it right, you'll hit. But you have to accept that a loss every now and then is a part of the game.
Yeah, that point I think is actually worth highlighting in that this is where, again, like, using time to your advantage, right? If you invest one time and it doesn't go well and then you just stop, you've only experienced the loss, right? So the idea is like generally wins, but you're going to have some losses here and there in some of your investments. And I think people don't, people put money into a 401k or an IRA or whatever that's in the stock market, and they're not tracking the fact that like some of those stocks are going down, and like they don't know that that's happening, and kind of, and for whatever reason, sometimes it seems like when it comes to real estate, it's like that's a unrecognized possibility that it can go down. But again, it's if you're not trying to time the market and the market goes down and you hold, you just kind of wait for things to turn around. Now you can still make money on those investments. So it's a strategy, or it's a philosophy that I think is really important. Is just that sort of cumulative over time, continuing to invest. You call it dollar cost averaging, whatever you want to think of it as. It's beneficial to just sort of keep going, I think, in one way or the other. And if you started investing right before everything went down because because it was so good for so long, like that's unfortunate, but it's going to come back around. So I think it's just kind of recognizing the real factors there. And it's, you talked about following macroeconomics and stuff, and there are some people that I look up to and respect, and think they have a very good handle on the financial markets, and I listen to what they say. But those people in 2021 said we were going to have negative interest rates, and they said that there's no way the Fed would ever raise the interest rates so high so fast, and like nobody knows. That's my point. Like, these are like very smart, far smarter than me. Nobody knows, and I think trying to control or predict that is going to probably hinder your investment philosophy over time. You just have to stick to the real fundamentals of, does this deal work right now, and do I have multiple exit strategies? Basically, I think it is probably some of the most important things. Keshav, I want to switch gears here and ask you the questions that I ask every guest. The first one, you touched on it a bit, but the name of the show is Know Your Why. And so I always ask each guest, what is your why? You're a young guy, you have a lot of time ahead of you. What's driving you right now? What's kind of that in the front of your mind, like, this is my big strong why?
Yeah, I think my most immediate why, I mean, there's long-term whys and, milestones along the way. My most immediate one is to attain financial freedom for myself, I would say, comfortably, where I can, run the business and, pay for my living expenses and still have, capital left over to invest every year without a W-2. And the more long-term why is like, once I've achieved it for myself, along the way, I'll still be helping people, but really focus on helping people, families, however many it is. Maybe it's 100 people, maybe it's 1,000 people, attain financial freedom through the investment strategy that we, help them kind of build out. I would say that's one of them. On the single family home construction side of things, the other firm where I'm a partner at, it would just be to build, I don't know, thousands of homes every year in the US. I think we're in a big I know we are in a big housing shortage. Quality, affordable, entry-level housing we're short of that everywhere across the country. And that's why we're becoming a nation of renters. So anything we could do to introduce more supply into the market and help bring like a quality living experience to people across the US, and then maybe in other countries one day too, but first the US, that would be another goal, just to provide housing for people.
Yeah, awesome. Tell us something about yourself that isn't common knowledge. Special skill, a hobby. We know you're from Boston now, so you can't use that one, but just something to let people know you better. No wrong answers. Anything that's a little more lighthearted, I guess.
I'm always asked what my hobbies are, and if I have, because I think between two jobs, it's kind of tough to have one. And so I would say at the moment, I don't really have a hobby. Beyond, I like what I do. I like the work that I do, so I have fun there. I'm not miserable, and I spend time with the people that I care about. But I would say no, like artistic hobbies at the moment. One day, though, with more time on my hands, it'd be nice to pick up an instrument, ideally something jazz related, like a saxophone or piano. And it would be nice to just learn more languages to be able to communicate with more people too. So I think, no hobbies right now, but if once I get the time, those would be the hobbies of choice.
Yeah, you're busy. You'll get there. That's the goal, right? Like free up some time to pick up those hobbies. When people hear this and they want to reach out to you, what's the best place?
I would say the best place is my LinkedIn. So it's just, if you just Google my name, luckily I have a unique name. That's one of the perks. The con of that is people mess it up often. But so it's Keshav Kolur on LinkedIn. I can send you the link, Jason, if you want to include that in the show description. And then the other one would be on our website. It's Clive Cap, CLIV as in Victor, ECAP.com/alternative-assets. My business partner, John, and I have put together 3 lead magnets, educational material, to help people who are kind of newer to investing outside the stock market get their feet wet. So one of them is just a 2-pager on why you should invest outside the stock market. What are the tax benefits? What are the typical returns? What are ultra high net worth individuals, people worth north of 30 million? How are they investing? And, for example, for those listening, people who are worth more than 30 million have more of their money parked in real estate than they do in the stock market. Just an interesting tidbit. And so facts like that, just to pique your interest. And then if you really love reading, really want more facts, we have a longer, probably 30-minute read of an ebook, which also just goes into more data about why you should be investing into alternative investments. And then, these investments aren't without risk. There's always going to be risk with any investment you make. There's risk in not investing at all too, because your money's losing value to inflation. And so we came up with 100 or so question checklist, a due diligence checklist that you can ask anyone that you're investing with outside the stock market, why you should be investing 50,000, 7,500, 200,000 with them. And those questions are like, what's your track record? What's the worst deal that you ever had? Why is this your investment strategy? It really just educates you on why you should be or not be investing with this person. So LinkedIn and our website link that I mentioned.
That's great. We'll put all that in the show notes so people can find you and connect. Keshav, thank you so much for coming on the show today. Thank you for taking the time out, sharing your story. I think it's going to be very valuable to a lot of people. So I really appreciate you being here.
Yeah, thanks so much, Jason. I appreciate you having me on.
Folks listening, I know you're going to love this one. Please like, rate, and review the show so we can get more great guests. And thank you all for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?